Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really all eyes on the Federal Reserve this week to see if they're going to cut interest rates further in the US. As has been discussed over the last few weeks, it's really a pretty tough call for the Fed. Jay Powell came out at the last Fed meeting and said that a cut in December was not guaranteed. But certainly if you look at the US economy, the employment side is really still pretty weak. It looks like jobs are sort of being lost over there at around sort of 30 to 40,000 a week. Although this has been slightly skewed because obviously with the government shutdown, there has been a lack of data coming through. But it does look like the weaker employment side will sort of override inflation, which is still running at about 3%. Now that is despite Trump and his administration saying that they brought down inflation and really, inflation is no longer an issue in the US economy. Which is quite interesting because Trump now sort of been there for just over a year. And inflation exactly where he sort of left it. At the end of the Biden administration, it was 3%. It's currently running at about 3% as well. Now rates are nudging up in the US. That 10-year is 4.17, the 2-year is 3.58, and that 30-year is 4.80. So they've just nudged up a little bit over the last sort of week or so. Now it does appear there is a little bit of good news out there on the soybean front for farmers, that China has started to purchase some soybeans from the US, but nowhere near the quotas they were supposed to be purchasing according to Trump. And so on the back of the hardship for farmers, Trump has now come out and said he's going to actually make some grants as farmers out there. That is the money that's being raised by tariffs. Which again is sort of quite ironic because tariffs are being paid for by either the US consumer or the US importer, and he's now redistributing those funds to farmers. Now, just waiting to see if we will get a Santa rally in the US. Certainly since around 1950, around 73% of the time we have seen a Santa rally coming into year end. And what is quite interesting as well is that Trump's approval rating appears to be falling pretty much every week now. Although, of course, he's not admitting that, calling any poll that does show a fall in his approval ratings as fake news. Now, supposedly there is a sort of potential peace deal on the table for the Russia-Ukraine war. But what is quite interesting, the US sort of deal here heavily favors Russia. And indeed, Trump has been relatively critical of Zelensky. Now that has seen Europe and its allies trying to scramble to get some sort of deal on the table as well. That is obviously a little bit fairer and certainly more compassionate towards Ukraine. It looks like India is further baiting Trump as well with a further meeting with Putin, despite the threat of further tariffs towards India if they continue to purchase Russian oil. Now just on the back of that, oil has sort of nudged back down below $60 now, 58.20 and change. Now that the budget is out of the way in the UK, all eyes will turn to the Bank of England, which meets next week, to see if they will deliver a further rate cut. because certainly the UK economy, desperately needs a further cut and a little bit of a boost. The issue is that you've got inflation that's a little bit sticky out there. Now, similar case for the ECB, they meet next week as well, and potentially there is a rate cut on the cards. It's just going to be interesting to see how it sort of plays out. Now in Australia, the Reserve Bank left rates on hold with the cash rate at 360, and the commentary was potentially a little bit more hawkish than expected, talking about concerns on the upside towards inflation. So now it will just be interesting to see how the first sort of couple of months of the Australian economy sort of perform, to see if there is still potential for a further rate cut out there. Now here in New Zealand, after the rate cut from the Reserve Bank, it appears there are some reasonably encouraging signs from the economy. Certainly the housing market is starting to pick up, but also as well, a little bit more optimism coming through in some of the surveys from just businesses, but also as well consumers as well. And certainly on the cost of living, a little bit of encouraging news in terms of butter prices. They've fallen dramatically over the last sort of few weeks on the wholesale prices. So now in New Zealand, with the better weather coming through, they just hope that we'll get some pretty decent sort of tourist spend over the next sort of 2 to 3 months that will really sort of help the New Zealand economy. So with that, we'd just like to wish you a very Merry Christmas and a Happy New Year, and we look forward to speaking to you in 2026. And if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.